What is up, guys? My name is Bryce Pruitt. This is the M1 Journey, and welcome to the channel. Okay guys, so welcome back to episode 8 of the M1 Journey. Kind of have a lot to cover today. It was a wild week, both in the world and in the markets. I had a lot going on with the election, and then more developments with COVID, and then the markets really reacted to everything. It was a really good week in the markets. They seem to like what they've seen from the elections. Now that those are over, had some really good developments with a potential vaccine coming from Pfizer. They had a test that had 90% success rate with nearly like 50,000 test subjects, so that's really encouraging news, and the market really responded really positively to that, as you might expect. At one point this morning, the futures on the Dow were up over 1,700 points. They didn't quite finish up that high, but the 800 points or so that was up is nothing to sneeze at, so talk more about that a little bit later. As far as what's new with the channel, please check out last week's Let's Discuss video where I talk about dividend yield. And then again this Thursday, I'm going to talk about Apple. So if you're interested in that, please check it out on Thursday. Please like and subscribe to the channel to stay up to date on all the latest content, as well as follow my social media pages at bpruitt_YT on both Instagram and Twitter. So I'll provide links to those as always. And then I think I'll get ready to talk about my thoughts on stocks to buy or look at after the election. So yeah guys, I know I usually make my disclaimer at this point, but I thought it might be a good idea to kind of share my thoughts about the markets post-election, kind of see where I think we might be at or where we might be going. So as it stands now, President-elect Biden taking over the White House, and then the Congress still being divided between the Democrats and Republicans. I think Wall Street likes that. They seem to have bought into that, or at least the idea of that. So it really shouldn't change a whole lot, I think, on Wall Street, but it could kind of change what sectors become more appealing under President Biden now. I guess one thing to look at would be potential infrastructure. I know that has some bipartisan support in Congress. So if you're into that, might want to look at Caterpillar. They could really take a surge if we get any movement on infrastructure. And then of course, green energy is going to be a huge deal. So stuff like Brookfield Renewable Partners, as well as NextEra Energy, are two things I would consider. Well, I mean, I already own Brookfield, but NextEra should see a pretty big boost. Another thing to consider is healthcare. Probably United Healthcare Group would be your best bet there. They're the biggest in the business and probably will do very well under a new administration. And then probably real estate might also be something to look at. Different REITs, specifically Realty Income, might be, it's already very popular, but might do even better in the next coming years. Different cannabis stocks will do well, potentially. I mean, there's definitely risk there. Nothing's for sure in that sector, but if you're kind of being aggressive and looking for some explosive growth, that might be where to go. But yeah, I just thought it might be a good idea to kind of share my thoughts about that, because it's definitely something I've been thinking about. And then if you have any stocks, any sectors that you guys are looking at, please share those in the comments. We can kind of talk about them, or I can talk about them in a Let's Discuss video down the road. So I guess we'll get ready to get into my update, but now I'm going to make my disclaimer that I'm not a financial advisor. I am just doing this for entertainment. Please invest, please at your own discretion. Do your own research. So yeah, I guess we'll get ready to get into it. Okay guys, so as you can see, it was a really good day, up over 4%. We had a bit of a sell-off in the later hours, because this was really almost 7% in the early part of the trading session, and this was well over 1,000. But still a huge week. We're up nearly 7% on the portfolio and over $1,100, which more than doubled my all-time gains since July. So we're nearly up 14% all-time on this portfolio since we've been on M1 Finance, and that's about $1,800. So we're really happy about that. Really got some good news, and hopefully it'll continue. So we're up 5% now on the Roth IRA, and most of that was driven by this week's performance because we're up nearly 5% here. And then today was a little bit weaker, less than 1%, but still, any gains are good gains in my book. So back here, my winner of the week is really the entire portfolio, and it was kind of tough to assign a loser, but it had to be done. So I'm going to choose Lowe's. As you might see here, Lowe's was down nearly 4.7% over the last 7 days. But if you look at the one-day chart, and that was entirely done today, down almost 9%. Lowe's had a sell-off since Lowe's was one of the big beneficiaries of the pandemic. A lot of people doing DIY projects in their quarantines, so people might be seeing an end to that, which kind of drove the share price down, which I might buy more Lowe's in the future, so that might not be an entirely bad thing. Kind of had some activity in the portfolio, a couple of buys, couple sells, but I'll start with the dividends first. Got some of my larger dividend payers, AT&T, JP Morgan, and Verizon, all paid on the same day. And then I also had Lowe's paid on November 4th. So as far as what I sold, I closed out of two more positions, which I kind of hinted at last week. So I closed out of, or nope, this is one I already talked about as my Uber sell. Sorry about that. So closed out of VNQ, which is the Vanguard REIT Index Fund. I just really wasn't interested in a REIT right now, for at least an index fund. I'm still continuing to buy Realty Income because that is a REIT, but I just thought this money could be better used elsewhere, so kind of found better opportunities to buy some more of these stocks, especially Microsoft is something I'm buying pretty heavily right now. And then my other sell and purchases, I got out of Duke Energy. I'm going to go with only one utility company in my dividends pie for the time being. So I'm going to stick with Dominion Energy. So I sold Duke, and then I poured a little bit more money in, and then I bought more Microsoft, and then several of these others, kind of let things fill out a little bit. So yeah, a little bit of an aggressive week in some respects, but kind of wanted to condense the portfolio down. I now have 31 holdings in my long term, and then in my Roth IRA was also a little bit more active. I got 2 dividends from the bond market and AT&T. Not very big, but everything kind of piles up over time, so everything helps. I had my bi-weekly deposit of $75, plus I saw an opportunity to contribute a little bit more, so got that and did my usual just 10 purchases where I let M1 allocate the funds, and this is what I came away with. So yeah, that's kind of what I had there. As you can see here in my Excel spreadsheet, most updated version, kind of added some new features here. I kind of added a way to see how much of my total income each company generates. So as you can see, Exxon has a big portion, AT&T and IBM are the largest. 3M is also a significant portion. So all told, between my Roth and my long term, I'm up to $656.04 annually, which has gone up dramatically over the last few months. So I'm very happy about that. This week's purchases, I moved around plus invested out of my own money $916.90, and with those buys, it generated $24.16 in projected dividend income for a yield of 2.63%. And that's just, whoops, didn't mean to do that. Oh, nope, having all kinds of problems here. There we go, sorry about that. So, as you can see here, most of that reason why it's such a low yield is because I was buying pretty heavily in my growth pie. Added nearly a full share of Microsoft, as well as some of these lower yielding stocks. Grabbed 2.5 more shares of AT&T and nearly 3 shares of Bank of America, which I think was good timing because they had pretty big days. And then down here in my Roth IRA, as usual, pretty small fractional shares out of all these, but you know, it'll build up over time. So I'm not keep going on that, and we'll finally get somewhere, I'm sure. So I created a new page on my Excel spreadsheet, kind of created a bit of a calendar, I'm calling it, that kind of shows when I will be paid by each company monthly, as well as how much that payment should be. So it kind of gives me a better idea of what companies to expect when, as well as which months are my highest payers. I created this table to kind of break down which months are my highest payers, which are my lower payers, as well as how much is my long term, and then how much is my Roth. So, and most people kind of share this kind of same pattern where March, June, September, and December are the big payers. That's pretty standard, but some companies pay on off months like January, April, July, and October. So I won't get as much income on those months, but that's okay because we're almost getting well around $90 in some of these months, so that's pretty exciting. Hopefully I'll get to around $100 on these relatively soon, and then some of these I'll probably get a little bit closer to 30. So those are some goals of mine, and I think that's about it on the new developments in the portfolio. I am thinking about adding a position to my long term still. I'm at 31 holdings now. I might make it an even 32. So if you guys have any ideas for what I should be looking at or what I should add, please share that in the comments. I'm kind of open to anything. Maybe a consumer stock, might add another one of those, or an industrial is really the two I'm most looking at. And then it could be something that I mentioned previously as a post-election stock. So if you guys have any thoughts about that, please share that in the comments, and I'll look at it and see what I think. So, yep, really good week. Hope for more green days ahead, and look for buying opportunities when they arise. So, continue to stay aggressive. All right, so I'll move into my final comments. All right, guys, so that should recap a pretty wild week on the markets. I'm not really sure where we're going to go from here. I could see a bit of a sell-off as soon as tomorrow. I'll have to keep an eye on futures, and then I guess with some parts of the election still being up in the air, I could see that causing some volatility down the road, but I mean, maybe it'll be settled pretty soon, so we'll see what happens there. But yeah, please, as always, sign up using my link on M1 Finance. When you do, you'll get $10 when you create an account and make your first deposit. So please check that out. As always, like and subscribe. Always really appreciate it. And I guess I'll get ready to see you guys in the next video. Thanks, guys.